Today is Monday, January 24th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, starting with the stocks this morning, we're sharply lower again. What are the dominant fundamentals affecting this market?
Well, right now, the dominant fundamental has to be the situation with Russia and Ukraine. That was, of course, simmering for quite some time, but that is now front and center as the most important influence. Of course, we do have the ongoing concerns about the Federal Open Market Committee. Their meeting is this Wednesday. So that remains very much important as well. But right now, everybody seems to be looking mostly at what's going on in the Ukraine.
And the FOMC meets on Wednesday. After this meeting is out of the way, where will the traders focus their attention? Maybe still on Ukraine?
Yes, it'll still be on that situation, but also the economic reports that are most important this week come at the end of the week. That would be Thursday, the GDP for the fourth quarter, that's estimated to be up 5.7%. Durable goods on Thursday, estimated to be down 0.5%. And then on Friday, the consumer credit report guessed at 68.6 for the index. My feeling is, though, that most of these reports, at least 2 out of the 3, or maybe all 3, will probably come in weaker than the consensus estimates.
Alan, with all the geopolitical things that are going on and of course, these reports, how important are corporate earnings right now? I mean, we have a lot of those coming out this week. Do they take a back seat to everything else that's going on?
Yes, they are, absolutely. And earnings, for the most part, have come in better than expected, especially most of the bank earnings, which you would normally see with interest rates advancing. Banks do better in that kind of environment. But I think that what we'll probably see is other fundamentals more important, of course, Ukraine, the Fed. So I do think that the flight to quality vehicles will probably continue to advance. That would be the dollar in the long end of the curve futures, yield curve futures, the 30-year Treasury bonds. Interestingly enough, though, the yen, which is normally a flight to quality vehicle, did not respond as it usually does in this situation. So from here, I would expect higher in the dollar and higher in the 30-year Treasury bond futures, with the Ukraine situation still very much ongoing. But the yen, I think, could probably work lower. And I think one reason is the Bank of Japan is going to remain very accommodative, and that will longer term undermine the yen.
Thank you, Alan. Steve, now let's talk about the grain markets. March soybeans are near $14. March corn, $6. KC March wheat is at $8. Will these prices hold? What are your thoughts?
I think they should hold. Again, today the beans and corn are lower because of 3 things. Number 1, there was some rains in Argentina over the weekend. Number 2, people exiting risk because of Russia and Ukraine. And, number 3 is the talk about interest rates going up, inflation cutting into disposable incomes, and the possibility of people just buying less food or being more selective in food buying and maybe using less fuel as prices go higher. Fundamentally, South American crops are getting lower. Because of that, U.S. corn and soybean exports are going higher. So these prices should hold, and we should trade even higher because of this shift in demand from South America to U.S. Wheat market is in a conundrum in that if there is invasion, Russia is the #1 exporter of wheat in the world. Ukraine is the second largest shipment of corn and the third in wheat. So that disruption could rally the wheat prices pretty significantly. But here in the U.S., the USDA could lower wheat export numbers. They could raise the carryout, which kind of limits the upside in wheat until we start trading U.S. spring weather.
Finally, Steve, what are the latest private estimates of U.S. corn, soybean, and wheat in regard to the 2021 and 2022 supply and demand and the impact that these private estimates have on futures prices?
The private estimates are bullish because in corn, as we mentioned, they're looking at probably as much as a 300 million bushel increase in the corn demand, which would bring the carryout down to 1,200. In the beans, you could see as much as 100 million bushels, which could bring the carryout down to 240 if demand for beans shifts to the U.S. Now, on a FOB to FOB basis, right now, Brazil is cheaper in beans than the U.S., but when we start looking in June, U.S. is cheaper. And on the wheat market, it's all about the crop size. And I think that if the dryness continues, the crop will be smaller and wheat prices will have to go higher. When you look at options in Chicago wheat, the most actively traded option right now is the $9 calls.
Please remember that ADMIS is hosting our annual broker meeting virtually beginning at 3:15 Chicago time this coming Wednesday. This is when we'll have our ADMIS town hall meeting, so please tune in on Wednesday. Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.